Let me start with 2024 guidance achievement update. We have again delivered strong results. Our adjusted EBITDA in 2024 reached 527.9 million euros and exceeded the top range of our guidance. To remind you, our latest guidance was between 480 and 500 million euros, and we published it in November last year. Guidance output performance was driven by two segments, green capacities and reserve capacities. In green capacity segment, we saw higher than expected volumes generated in our onshore wind farms. And in reserve capacity segment, we managed to capture higher than expected electricity prices. Regarding 2024 investments, they amounted to 812 million euros, and we're in line with our guidance. Investments remained at historically high level, as we invested 42% more than the average investments of the last 5 years. Now let's turn to the further financial highlights of the year. Adjusted EBITDA grew by 8.9% year over year and reached 527.9 million, driven by better results in green capacities and network segments. Adjusted net profit decreased by 3.2% to 277.5 million euros, mainly due to higher interest expenses. Investments remain at historically high levels, while the return on capital employed decreased by 0.8 percentage points to 9%, driven by the lag between the deployment of capital in investments and the subsequent realization of returns. Our leverage metrics remain strong, with FFO to net debt at 29.7% and net debt to adjusted EBITDA at 3.1 times. Additionally, S&P has reaffirmed the group's BBB+ credit rating with a stable outlook, which is in line with our commitment to maintain a solid investment-grade credit rating of BBB or above over a 4-year strategic period. Finally, following our dividend commitment for 2024, we intend to distribute a dividend of 1.33 euros per share, which is 3% higher than last year and indicates a dividend yield of above 6%. Let us now take a deeper dive into each of our main KPIs. Starting with adjusted EBITDA, firstly, green capacities EBITDA grew by 17.9% to 262.4 million euros as a result of new asset launches and higher captured electricity prices due to flexibility of our assets. Secondly, networks EBITDA grew as well by 22.2% and reached 219.9 million euros, mainly due to higher RAB as a result of continued investments into our electricity network and higher regulatory WACC, which reflects a higher interest rate environment. Thirdly, reserve capacities generated 32 million euros of EBITDA, which is lower by 7.9 million euros compared to the last year. And the decrease is related to extraordinary conditions during Q1 and Q4 of 2023. Finally, our customers and solutions segment, its EBITDA was lower by 23.3 million euros and fell to 7.1 million euros. The decrease was driven by lower B2B natural gas supply results, which was partly offset by lower losses from B2C electricity supply activities and better B2B electricity results in Poland. Next, let's take a closer look at the EBITDA performance of each segment. Starting from green capacities, it remains the largest contributor to the group's adjusted EBITDA, contributing for almost 50% of the total. The main drivers behind 17.9% growth year over year were these. Firstly, the launch of new assets. We have launched 3 new assets in 2024, Silesia 1 wind farm, Tauragė solar farm, and Vilnius CHP biomass unit. On top of that, Kelmė wind farm and Silesia 2 wind farm supplied first power to the grid. Second main reason for growth was higher captured electricity prices, mainly due to flexibility of our assets. let's move to the network segment. The key drivers behind the growth in networks adjusted EBITDA were higher regulated asset base, which grew by 10.8% from 1.4 to 1.6 billion euros due to continued investments in electricity network, and an increase in WACC set by regulator, rising from 4.1% in 2023 to 5.1% in 2024, driven by higher interest rate environment. It's important to note that the tariffs for 2025 are already set and include a 13.3% increase in RAB, reaching 1.8 billion euros, and a WACC increase to 5.8%. Next, reserve capacity segment. We achieved strong performance in both 2024 and 2023. However, the result fell by 15.8%, totaling 42 million euros. This decline was due to lower market premium earned, which is related to extraordinary market conditions in Q1 and Q4 of 2023. Lastly, customers and solutions adjusted EBITDA was lower by 23.3 million euros year-over-year and amounted to 7.1 million euros. The decrease was driven by lower B2B natural gas supply results, mainly due to inventory write-down reversal in 2023. However, it was partly offset by lower loss from B2C electricity supply activities and better B2B electricity supply results in Poland. Next, let's take a look at our investments. Our investments amounted to 812 million euros, maintaining historically high levels, which are 42% higher than the average over the last 5 years, even despite a year-over-year decrease of 13.3%. 53.5% of our investments were made in the green capacity segment and 41.5% in the network segment. Green capacities investments reached 434.5 million, reflecting a 19.9% decrease. This decline is mainly due to the successful completion of several major projects, Silesia 1 and 2 wind farms, and Vilnius CHP biomass unit. In 2024, the major part of investments were dedicated to Kelmė wind farm in Lithuania and solar farms in Latvia. In the network segment, we invested 337 million euros, primarily focused on the expansion and maintenance of the electricity network. Year-on-year investments declined by 2.8%, mainly due to smart meter installation project approaching completion. Moving on to our net working capital numbers, it has decreased by 41.4% since December of 2023 and by 11.7% since September 2024, and reached 102.6 million euros by the end of the year. The main drivers behind the lower net working capital were higher trade receivables, mainly due to increased balance of trade financing facilities used for purchasing natural gas, and lower inventories due to lower volume of natural gas stored. However, it was partly offset by higher trade receivables. Adding it all together, our free cash flow metric amounted to minus 193.9 million euros, mainly as a result of investments exceeding EBITDA. Regarding the leverage metrics, our net debt increased by 22.4% year-over-year and reached 1.6 billion euros at the end of 2024. Our main credit metric, FFO to net debt, improved to 29.7%, significantly above 23% threshold required by S&P for a BBB+ credit rating. Net debt to adjusted EBITDA increased from 2.7 times to 3.1 times. Finally, our guidance for this year. We expect our 2025 adjusted EBITDA to be in the range of 500 and 540 million euros. We anticipate growth in 3 of our 4 segments: green capacities, networks, and reserve capacities. In the green capacity segment, growth is expected to be driven by new projects with more than 700 megawatts reaching COD in 2025. These projects include Kelmė Wind Farm, Silesia Wind Farm 2, Stelpe Solar Farm, Varme Solar Farm, and the Polish solar portfolio. In the network segment, we anticipate an increase in results due to higher RAB, driven by continued investments, and approved higher WACC, reflecting higher market interest rates. In the reserve capacity segment, we expect higher results due to anticipated increases in electricity generation volumes from new services provided. And finally, we expect lower results in customers and solutions segment, driven by further negative result in B2C electricity supply, including adverse prosumer effects under the current net metering scheme. In terms of investment guidance for 2025, we expect investments to be in the range of 700 to 900 million euros. In green capacity segment, the main investments will be made in Kelmė Wind Farm and Kruonis Pump Storage expansion projects in Lithuania, as well as Varme and Tume solar farms in Latvia. In the network segment, investments will be focused on electricity network, both maintenance and expansion.